India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. The middle of the week, Wednesday morning, we are coming to you live as always from the CNBC TV 18 Motilal Oswal studios. Markets are looking a little better and hopefully they will look even better as compared to yesterday, which was a day of some recovery. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, morning. And I think the winter's coming back to Mumbai, is it?
No,
it's looking good.
This is wearing the outfit before the winter goes away. You know,
okay.
Because we're halfway through January and what a half it's been. You know, the bulls, they have been quite jittery. But it's the attire is to say goodbye to the winters. We're almost done with it, I think. We had a few days of Mumbai winter because...
I don't know about Mumbai winter. There was no Mumbai, by the way, today because those of us who come from the western suburbs, you couldn't see Worli. You can't see anything. It's haze, it's grey. Yeah. I don't know where the city is.
Well, Mumbai is upgrading. So I don't know if we'll upgrade by the time, during our working lives. But of course, the situation is bad in terms of just the pollution. And I think the weather also plays a role in that sense. The markets have had quite a bit of a ride. This was all supposed to happen after the 20th of January, right? Once Trump takes over. Well, markets, of course, are forward-looking creatures, and maybe a fair bit is in the price. So I just want to, before I get down to the cues from last night and then kind of tie in the levels, etc., just 3 points I want to highlight, which should come up on your screen. And this is probably the broad way that you should, at least I am looking at things, because, the macro and top-down is important, right? First is, as a base case, one assumes that Trump will be pragmatic. And this is something that we were discussing yesterday, that, what we are seeing now is peak Trump. And once he's president, it'll not be peak and it'll be somewhere in the middle. It won't be dramatic. He'll be pragmatic, businesslike, and he essentially would want world markets higher, not lower. Remember, if you even want the US higher and at the expense of the rest of the world, eventually it feeds back in. So he's got a good team, people who've been in the markets for decades. So that's number one. Second, has the dollar peaked? Broad dollar peaked. So you look at the dollar index, for example. So again, something we said yesterday, last night, dollar index was down about 0.6, 0.7%. But this is for now. If tariffs slowly start to sort of come in and deficits expand, the dollar, we'll see. Oil strength may not sustain. I think this is the relatively easier of the call. There is the push towards renewables. At the same time, Trump, of course, wants to drill, baby, drill. And he generally wants lesser geopolitical conflict. So that premium may actually go out of oil prices. So if this is these are three things at a top-down, high level which play out, this is certainly very good news for emerging markets. This is not the consensus at this point in time. Now, let's quickly run you through the individual cues, which is a little bit here, a little bit there, nothing blowout one way or the other. S&P was up, Nasdaq was down. The 10-year, it hit 4.8, but then cooled off a little bit to about 4.78 by close. Dollar index, as I said, about 0.75% lower. We're at about 109.21. Oil prices were down about 1% as well. And again, this is basically, there were reports from, I think, Bloomberg, which suggested that the incoming president, Trump, is preparing a raft of executive orders aimed at boosting energy supply. Well, why not? He's, of course, campaigned on this. Lower energy costs for Americans, lower oil prices overall. Now, U.S. producer price index numbers came. They were slightly softer than expected. Today, you get the CPI numbers, and consensus sees the core CPI, ex-food, energy, etc., growing about 0.2% month on month. So this is going to be important, especially because the last jobs data was blowout. So that's the cues, right? It's certainly much more positive. Oil is down, dollar is down, and equities are not sending a very negative signal our way. So where does it leave us in terms of levels? So we saw a bit of a recovery yesterday. Markets had been extremely oversold. They still remain oversold, so there is room for bounce. So I'll just put out the upside targets, initial upside targets, and these are all hourly averages, 23,261, 267. It's just changed a little bit, the 20 hourly average. The second is the 40 hourly exponential average, which is 23,398. very, very near-term levels for the Nifty. And of course, on the downside, yesterday's low comes in at 23,047. Bank Nifty's immediate resistance is the 40 hourly. Remember, it took out the 20 hourly yesterday and it closed above it. So 40 is 49,105. And then 49,227 is the next level on the upside. And again, for the Nifty Bank, yesterday's low becomes a bit of a pivot point, 47,898. So that's the setup. GIFT Nifty will come up on your screens. I'll give you a sense of how we're likely to start. About 16, 17 points higher. Lots of individual stocks are moving around. Lots of stocks have corrected. Opportunities will emerge. It's essentially going to be, a market which will give you lots of opportunities through the course of the year. But immediately in front of us in the next few days is going to be President Trump and those 25 executive orders, which, as Reuters said, perhaps is coming our way on day one. But if you believe that, the incoming administration will be pragmatic and businesslike and it won't do anything to crash markets, I think that's something that one can live with. So I think that's broadly what I'm going with. We just have to work it through day by day because one thing is certain, it will be quite volatile. So on your screen, 16 points, higher start. Surabhi.
Oh, Prashant, absolutely. I completely concur with that view that whatever happens, we know that here's a man who wants Wall Street higher. The bottom line is just that. So perhaps whatever is needed to change in his own stance and maybe the rhetoric or maybe the commentary, he will do it. Perhaps that's the hope and faith with which the markets are working. In fact, if you want to be an optimist, you may want to read a little bit into the fact that he's actually going to be attending the World Economic Forum, though it's going to be through, I think, VC. Through the digital medium, not in person, but at least he's going to be attending. At least he's going to be engaging, because earlier, there was a lot of chatter about how he's very dismissive about, any sort of a mega, pro-globalization, come together of the world sort of a setup. Anyway, now to come back to the cues over here, the fact that the producer price index, the producer level inflation data, was cooler than expected. That is what really spurred the excitement on Wall Street. Having said that, yesterday's trade was again about rotating away from tech stocks into some of the other names as well. And we saw that because the Nasdaq was down while the other indices managed to pull up higher. The number was 0.2% versus expectation of a 0.4% increase. That's on the PPI. Today, of course, we'll look out for the CPI numbers. Also, Wall Street is going to watch out for the big bank earnings because the season is kicking off and the expectations are running very high. Today's a very heavy day. You've got JP Morgan, Wells Fargo, Goldman Sachs and Citi. So in the real sense, the big guns fire up today, and let's see if they will keep Wall Street's excitement intact. Also on the sidelines, never a dull moment. Mr. Musk manages to find his way into the headlines, and yesterday's news is that he's being sued by the SEC for allegedly, not disclosing early on the fact that he had started building a position in Twitter back before the acquisition of the social, network. So that's on the sideline. Anyway, to come back to cues closer to home, Asian markets are slightly mixed. There's a lot of chatter out of South Korea again. The political events over there. The former president has been finally arrested. That's the big headline. And markets are a little all over the place. Asia is not giving a very clear directional cue, but largely trying to build on to some of the positivity that Wall Street has given. Now, for us here, despite the fact that we had a pretty decent session, we had green on the screen, and the market ended closer to the highs of the day. If you were expecting any relief from FPIs, well, guess what? Look at the extent of the selling on a daily basis. 8,000 crores. If you're an optimist, you'll say our market is deepening because they can sell 8,000 crores, we can buy 8,000 crores, which is what happened again yesterday, almost offsetting the entire FPI selling number. But that's a picture that hasn't stabilized. No taking away from that. A lot of result reactions. We'll go over some of the names today in just a bit. Sula has come out with numbers. Shopper Stop's numbers look very good. Sula has been a little on the weak side. So we'll talk about those numbers as we go forward. Today is an interesting day. HDFC Live, CAT, Oracle Financial Services. This is, of course, L&T Tech. And this Bank of Maharashtra. Remember, Bank of Maharashtra is among the 5, PSU names which have gotten the green signal for a dilution of the government stake. And some of those stocks are flying yesterday. So let's see. We'll hear the management as well over the next 24 hours. I just want to end with, a news development that's important, which our colleague Ritu brought us, after market hours yesterday, which is JP Associates. If you look at the JP Associates 1-year chart, in between there was a lot of flutter and excitement, and the stock went all the way up to, I think, 25-30 rupees. Then it's again cooled off to almost just about $5 here or there. And the story is out. There are no bidders. It's only the National Asset Reconstruction Company of India. They were the lone bidders, and they have bid about 12,000 crores, which was the reserve price. But there's no one else. So maybe lenders have no choice. The total claims admitted were over 52,000. The NARCL is offering just about 12,000. So that's the extent of the haircut. But maybe this is the way the story goes. Right now, no hot interest in JP Associates and a real more meaningful takeover, which maybe explains why the stock completely, that rally on JP Associates fizzled out. Anyway, that's on a side note. But Nigel, I guess the bulls will hope for a little more green today.
Well, that's right. And I totally agree with that point that Prashant made with regard to Trump being more pragmatic, because he's a businessman before being the president. So I think the moves will not hurt the economy. So he'll make those pragmatic moves is my best guess on that front. Let's get to the top global cues, though. The Troika, they are better behaved this morning, which is very, very good news from a bullish perspective. The dollar index is softer, crude oil prices a little bit lower, and the US yields, well, they haven't moved too much. So all those three well behaved. Well, if I look at the net institutional number and I see the Nifty reaction, it clearly was that invisible hand, so to call it, that was hurting the markets in the last few days. Because yesterday, we did have a negative number and the markets ended higher. And the last few days, the institutional numbers were not too worrying. The problem was that so-called invisible hand that was hurting the broader markets in particular. For the time being, that invisible hand seems to have played its part, and most of that selling seems to have got absorbed. So that's one factor. Moving to the futures data then. In yesterday's trading session, there was some mild short covering that we saw on the Nifty and a bigger one on the Nifty Bank. In fact, on the Nifty, you had the premiums that moved up a little bit on the Nifty futures, that is. So mild short covering. But from the FIs, that wasn't the case. They added some longs, they added some shorts as well. They continue to remain net short with close to around 83% of their positioning on the short side. And as we have been saying, both of them are at extreme ends. The clients as well as the FIs. Clients are net long, the FIs, well, they are net short as well. Moving to the options data then. Before we get to that, the short covering from the FIs wasn't seen on index futures, but it was actually seen on stock futures because they covered some shorts and they added some long positions. So that could be one of the reasons that you saw the broader markets as well did quite well. Moving to the options data then, you have the FIs. Well, on index options, they bought more calls than puts in the ratio of close to around 2:1, which brings both the active strikes up for you on the screen. 23,200 call, 23,000 put. Extremely crucial marks. Take a look at the premium as well. And just punching in the numbers and going by the technical levels, we're getting a broad range. On the upside, 23,350, that's going to be a bit of a resistance zone and a very, very crucial mark. The bulls will want to take out this level. And the extremely crucial support is at around this 22,800 to around 23,000 odd mark. One positive yesterday clearly was the Nifty Bank. After a while, it made higher high in yesterday's trading session. It's been making lower highs and even it made a higher low in yesterday's trade. And you'd like this trend to continue. So for the Nifty Bank, very, very important that it gets past that 49,000 odd mark. But since the Nifty Bank showed signs of coming back to life, I'm going with a financial and a financial name. Yesterday, you had Shriram Finance that after seeing a 30% correction, the stock ended at the high point of the day. And it came on very, very good volumes and good amount of delivery as well. So that's a stock that I'll look at from here on. Massive volumes in yesterday's trade.
The invisible hand. I quite like that. That's a nice terminology for this clutch of investors and traders who are not represented on the institutional side. And they're the ones who've been moving the market, off late in the last couple of days. So absolutely. Let's get to the equity call of the morning. Sai Mukherjee of Nomura says that the start of 2025 presents macro uncertainty with unprecedented divergence in growth, inflation and rate expectations across key economies. He says this can drive the risk premium higher, impacting valuation multiples. He recommends being highly selective and avoiding richly valued stocks. He says they are overweight on financials, consumer staples, that is FMCG, oil and gas, pharma, telecom, power and internet, along with the real estate. They are underweight on consumer discretionary, autos, capital goods, cement, hospitals, and metal stocks. He sees a Nifty range of 21,800 on the downside to 25,700 on the upside by 2025 end, which means no fresh highs. At least Nomura doesn't see them coming soon.